The US equities closed lower last week, posting a third straight weekly loss amid uncertainty about fiscal stimulus from the Federal Reserve, concerns about tensions between the US and China, and worries over the sluggish pace of the US economic recovery. Meanwhile, Wall Street also worries about a jump in coronavirus cases in Europe. European countries announced new restrictions to curb surging coronavirus infections in some of their largest cities, while Britain was reported to be considering a new national lockdown. Friday's session marked the first time the S&P 500 index closed below its 50-day moving average, 3,343.42 since April. The broad index shed by 1.1% on Friday to close at 3,319.47. For the week, it was down by 0.6%. U.S. stocks slid after the Federal Reserve pledged to hold interest rates near zero until at least 2023 and keep its bond buying program in place to stimulate the U.S. economy as part of a dovish policy stance. Meanwhile, the Dow Jones Industrial Average closed at 27,657.42 on Friday, down by 0.9%. Week on week, the Dow lost less than 0.1%. Investor sentiment on stocks was also soured by rising US-China tensions. The US Commerce Department said on Friday it is prohibiting transactions involving Tencent's WeChat and ByteDance TikTok. The news highlights lingering Sino-American conflict. Meanwhile, the Nasdaq Composite Index fell by 1.1% on Friday to close at 10,793.28. For the week, it lost 0.6%. Losses in heavyweight technology names such as Amazon and Apple weighed on the market. Thus, Apple stock plunged by 3.17% on Friday to end at 106.84. For the week, the tech giant posted a 4.61% loss. Shares of Apple closed $31.14 below its 52-week high, which the company reached in September. However, starting this week, investors snapped up beaten-down tech names, including Apple, though fading hopes of further fiscal stimulus continued to weigh on investor sentiment. Meanwhile, among last week gainers, Oracle Corporation shares were in focus. Despite falling for 3 straight sessions on Friday, Oracle still eked out a 4.82% weekly gain, closing at 59.75. Trump administration issued an executive order banning the video sharing app TikTok, citing a threat to national security amid escalating tensions between Beijing and Washington. The order allowed private sector entities to execute a commercial transaction responsible for maintaining and operating the network. Microsoft, Oracle, and Walmart were potential bidders for TikTok's US business. Oracle won the bid, and it could take up to a 12.5% stake in TikTok's parent company. ORCL struck the deal as it is confident in its ability to deliver a highly secure environment to TikTok and ensure data privacy to TikTok's American users and users throughout the world. Last Saturday, Trump approved the deal. However, the Chinese government, which needs to approve the deal, has remained quiet on the transaction. What happens next remains to be seen. Investors should expect the stock market to remain volatile, perhaps through the November elections in the US. You've watched a weekly financial review with me, Anna Kasatkina, on Insta TV. Subscribe to our YouTube channel to always keep track of all the latest financial events. And we'll see you back soon. Bye.